Hello and welcome back to this new puzzle. Today I'm gonna show you how you can trade the right shoulder of the head and shoulder pattern. As beginning, I will show you what is the head and shoulder pattern and what we can expect from it. So let's begin with the theory as beginning. A head and shoulder pattern is created after the price makes higher highs and higher lows during the price development. At a moment in time, price faces resistance that is coming from above. It comes down by testing in this way the support area that is located on the lower part of the wave, and by creating in this way the neckline of the pattern. This neckline will be valid only when the price will bounce up again. At this moment we can see that this is the right moment for the price to complete the right shoulder of the pattern. It will be called completed when the price will come down again. The first target will be the support line that is also the neckline of the pattern, and any breakdown of the pattern will create and complete the head and shoulder pattern. So this is a very easy pattern to be distinguished on the charts, and here we have our pattern as we can see it. So this is the basic pattern. What we are gonna do now is that we are going to anticipate this right shoulder. So let's go back on the charts. Right now we have a trading possibility where the price made this up movement, correction, another bullish movement, and it came down to the lower part of the structure. So this is what happened in our scenario. Let's go on the chart right now. The first scenario that we are going to look at, I'm going to break it down on the 4-hour time frame because this is more visible. And here we have the first example. Price made the first bullish movement. We have the correction that we can see. Price made another higher high. It came lower. We see the price to create another pullback, and after that it continued to move lower again. So this is another type of bearish head and shoulder pattern. As you can see, the neckline of this example is not horizontal, and this is a variation of the head and shoulder pattern, the classical one. We are anticipating this right shoulder right now. Look at where do we have our shoulder on our example. We are looking at for this pattern. If I'm going to make it smaller, we will see that we have this pattern. Price created a big movement. This is our big movement. Let's make it red. We will see the price created the pullback at this point and another bullish movement. At this moment it was a very tricky situation to sell it. However, we can see the price is coming down and we are anticipating the right shoulder of the pattern right now. So probability is very high that we can see the price to come close to this level, and there is a reason about that level. I'm going to delete this one now because we have structure from the left. Look at this structure support. All of this structure that we are looking at, sorry, this is structure resistance. This is the first structure, second, third here, so probably the price can come and it will face support. Also, the support that is coming from the lower part of the structure can push the price higher. Also, as you may know, today is FOMC, so we need to be careful. It is not advised for us to buy right now and to anticipate the movement in up and the down form. What it is advised is that we need to wait for the price to create this bullish movement. We need to see how the price will develop close to this area. This is because we are in front of FOMC, and if price is going to show a reaction close to 1.3070, we can see it moving lower again. For this movement, the first target will be the neckline of the pattern, because we can never know if this is going to continue. So approximately up to 1.2830 is a very good target. And if price is going to break down below the structure, it can continue moving lower. So this is what we are going to do right now. We are just going to watch for sale on the area that I pointed out here, close to 1.3070. FOMC can push the USD up again. So this is our scenario. As you can see, you can just wait without risking on this trade at all before FOMC. So you can try to sell it later. This is how we can anticipate the sell of the right head and shoulder pattern. The stop loss that is recommended usually in this type of scenarios is above the top of the pattern. So this is the top of the pattern, and the stop loss should be above this point. This is how we can trade the right shoulder of the pattern for the head and shoulder pattern strategy. And here we have another beautiful head and shoulder pattern with a slope neckline. This is a small one, as we can see, the right shoulder, but it is a shoulder as long as the price completed this movement. We can see this is very small. We can't anticipate because this type of pattern is not so clear for the right shoulder, but when the price broke down, this was very visible for the bearish continuation movement. So it is